think the thing about cartoon characters is like you can imagine how they would look. Like you can just choose how they would look. You know? She looked like Marceline when she pop a bean, and she rock with me. I pull up to the scene. She's a fiend, strawberry ice cream. Meet me at the tree, and she asks, "Are you scared of me?" Yeah, I am, but it don't matter, 'cause you look like Marceline when she pop a bean, and she rock with me. I pull up to the scene. She's a fiend, strawberry ice cream. Meet me at the tree, and she asks, "Are you scared of me?"
I think the government need money. So what can I do?
You need money? You want to increase your fund?
Yes.
Let's choose Treasury bills.
Excuse me, sir. Can you explain it to me about Malaysia Treasury bills?
You want to know about the Malaysia Treasury bills? Let's go.
There are a big difference between Malaysia Treasury bills and Malaysia government securities, even though the name is quite similar. Malaysian Treasury bills issued by Malaysian government. It is a short-term securities that have maturity value less than a year, while the Malaysian government security is a long-term coupon-bearing bonds. Malaysian Treasury bills are issued to raising the short-term fund for financing the government working capital. Malaysia Treasury bills can be purchased via the competitive auction based on the yield bid. Only primary dealer that select by the Bank Negara Malaysia can bid for the auction. You may ask, who are the primary dealer, right? Primary dealers are the financial institution that can buy the government securities directly from the government with intent to resell back to others. The primary dealers are among the commercial bank. Let me give you the example of the commercial bank. Let's take a look closely. Example of the commercial bank are like Maybank, CIMB Bank, Hong Leong Bank, Public Bank, Bank, HSBC Bank, OCBC Bank, JP Morgan Chase Bank, RHB Bank, Standard Chartered Bank Malaysia, and lastly, United Overseas Bank. All the examples that I give you are referring to the website Bank Negara Malaysia 2022.
Next, the reason behind the Malaysia Treasury bills issuance is Malaysia Treasury bills allow central banks to simultaneously raise short-term funding for government and absorb excess liquidity from the financial markets. It is issued when the government needs money for a short period. Malaysian Treasury bills are essentially a mechanism for the United States government to solicit public funding. For example, as part of its open market operations (OMO) strategy, the Reserve Bank of India (RBI) also released these treasury notes in an effort to control inflation and people's borrowing and spending patterns. The majority of central banks in developed nations that have well-developed government bond markets use Malaysia Treasury bills as a financial tool for monetary policy instead of their own assets. Next, we go to the benefits investing in Malaysia Treasury bill. There are 4 benefits investing in Malaysia Treasury bill. Firstly, we go to the benefits number 1, which is virtually risk-free. As we know, Malaysia Treasury bill is a short-term government country. The government is the highest authority in the country, and they need to pay back a liability at that time to the investor. The government ensured that the funds will be paid back during event financial crisis. So, investor will get back their money with promised interest. Next, we go to the benefits number 2, which is liquidity. Malaysia Treasury bill has a maturity period which is 14 days until 364 days. So, when we know the maturity date in Malaysia Treasury bill is, investor can sell their Treasury bills in secondary market. Third, no transfer transaction cost is charged. It means the broker does not charge investor to buy treasury bills. Benefits of investing in Malaysia treasury bill is fixed interest rate. Malaysian treasury bills can provide steady income because they have to pay fixed interest rate. So the existing Malaysian treasury bill are not favored if interest rate risk because their rates are less attractive than the overall markets.
Now we go to the characteristic of Malaysian treasury bills. Malaysian treasury bills is the financial instrument of the money market that has 6 characteristics. First of all, short-term maturity. As we know, Malaysian treasury bills are the short-term securities issued by the government of Malaysia to manage the economy. So, the maturity of Malaysian treasury bills are short-term, which is exceeding 1 year. For the example, 3 months, 6 months, or 1 year. Secondly, sold at discount. Malaysian treasury bills sold at discount through competitive auction facilitated by Bank Negara Malaysia, which is BNM, with original maturities and the redemption will be made at par. Thirdly, issue on weekly basis. Malaysian treasury bills issue on weekly basis and the auction will be held 1 day before the issue date. For the normal auction day is Thursday. And the result of successful bidders will be announced 1 day after. Fourthly, low risk. Why we can say risk of Malaysian treasury bills is low, it is because Malaysian treasury bills are backed with government of Malaysia, which is issued by government of Malaysia. Fifthly, high liquidity. Malaysian treasury bills are high liquidity. Why we can say it is high liquidity? It is because it can be easily converted to cash for the expected value or market price. So it also easy to trade. And the last one is tradable on yield basis. Malaysian treasury bills are tradable on yield basis, which is discounted rate based on bands of remaining tenure.
Lastly, I will talk about the tenure of the treasury bills. Treasury bills have a maximum maturity tenure of 364 days, available at 0 coupon interest rate. Treasury bills are also categorized as the short-term securities issued by the government with maturity of less than 1 year. Purpose of issuing treasury bills is to raise short-term funds to finance the government's working capital. Treasury bills is sold in the primary market by the competitive auction on a year-bid basis. Only principal dealers appointed by Bank Negara Malaysia can bid for the auction. Treasury bills is sold at discount from its par value and is redeemed at par value till the short term becomes matures. Something refers to when an investor pays less for the security than it will be worth when it matures. The increase in price at the time tenure become matures provide investors a return. Yield on treasury bills is influenced by the difference between the selling and buying price. If a new treasury bills is purchased and held till the tenure become matures, the return is the difference between the par value and the purchase price. If treasury bills is sold prior to tenure become to matures, the return is based on the difference between the price sold in the secondary market and purchase price. For 1,000 treasury bills may be sold for 970 for 3 months treasury bills, 950 for a 6-month treasury bills, and 900 for a 12-month treasury bills. Investors demand a higher rate of return to compensate them for trying out their money for a longer period.
In conclusion, Malaysian treasury bills are a type of short-term securities which that the Malaysian government issued to raise money for a short period for working capital or to pay its present obligation that exceeds its annual revenue output facilitated by Bank Negara Malaysia. The reason behind the Malaysian treasury bills issued for government funds. Malaysian treasury bills are also one of the safest investment in the world and one of the money market securities that are accessible to private investors. The benefits of investing in Malaysian treasury bills are virtually risk-free and have a fixed interest. The characteristics of Malaysian treasury bills are short-term maturity and issued on weekly basis. The normal auction day is on Tuesday and the result will be announced 1 day after. The tenure of Malaysian treasury bills sold at discount from their par value and sold in the primary market by competitive auction on a yield bid basis.